Level 1, $0. You are a case number. You're 19, sleeping behind a laundromat, charging your phone off the outlet by the dumpster. The county is closing the overflow shelter on 5th Street. You show up to the public hearing because a flyer said residents could speak. The sign-in sheet needs a current address. You don't have one. You sit in the back row instead. That's when Dalton Reyes finds you. 26. Aide to the councilwoman who wrote the closure motion. Blazer too sharp for a government salary. He crouches by your chair, asks your name, nods like he's filing it somewhere permanent. He isn't. He hands you a card, thick stock, gold seal catching the fluorescent light, and says 6 words that will outlive this building. Call me if you need anything. Then he's gone. Back to the front row. Back to people whose names matter tonight. The shelter closes on schedule. Bulldozers Tuesday morning. The news segment blurs your face and not his. Standard practice, the reporter tells you, for people in your situation. 3 weeks later you're in a public library. 41 minutes left on your session. A librarian pretending not to notice you've been there since opening. Teaching yourself what an API is. That search becomes the first brick of something worth more than the county's entire annual budget. Between here and there, the government spends 2 decades learning your name one filing at a time. Dalton Reyes spends those same 2 decades wishing he hadn't handed you anything at all. Level 2, $50,000. You are a line item. 11 months later you land a $16.50 an hour job 2 blocks from where you used to sleep. You file taxes on the IRS's free portal. It times out twice. Your refund is $980. It feels like winning something, until a notice arrives for $290 in back estimates on freelance work nobody explained. The government doesn't send a guide with your first paycheck, it sends a bill after your first mistake. You need a driver's license because the new office is unreachable by bus. The DMV wants a birth certificate lost in a shelter fire years back. Replacement takes 6 weeks and 2 rejected trips. The license costs $42. Getting the paperwork to qualify costs $360 in missed shifts. The state charges you to reconstruct proof of a life it already has on file. At night, you build a plain language translator for benefits forms. The same forms that once demanded documents you didn't have. 200 users the first month, all of them typing the same panicked search terms you once typed on a library timer. A cease and desist arrives, claiming your tool may create the appearance of an official service. Legal response quoted at $2,100 you don't have. You change the font, add a disclaimer, and nobody follows up. The tool crosses 2,000 users. A small fund offers a meeting. You drive there in a car worth less than the building's catering budget, and park in a structure the city built with tax revenue from a project 3 blocks from your old shelter. Parking costs $22 to walk into the room that changes everything. Level 3, $750,000. You are an entity. The fund invests $180,000. Incorporation runs $750. A registered agent $275 a year. A minimum franchise tax of $800 owed before you've earned $1. Your salary settles at $88,000. For the first time, your tax bill exceeds every dollar of public assistance you received across your whole childhood. Nobody marks the crossing. An accountant, $2,800 a year, finds $9,400 in deductions, the free portal never mentioned. Home office, mileage, a retirement structure you'd never heard of. None of it was hidden. It was simply never explained to a version of you with nothing to deduct. You apply for a business loan, 51 days of paperwork, 3 years of returns you don't have, a plan rejected once for insufficient market detail. A consultant rewrite costs $1,200. Approved at 8.1%. The councilwoman's husband's development firm gets the same federal program, same week, at 4.4%. Not a different program, a different relationship with the people who define risk. Then an audit. Random selection, the letter says. Though your accountant tells you new businesses with sudden income jumps rarely are chosen at random. 4 months of documentation later, they find nothing owed. Proving it costs $6,700, unreimbursed. The government confirms you're clean and doesn't cover what it cost you to prove it. That same week, Dalton Reyes, now a city councilman himself, appears on a panel about empowering small business, talking about barriers to entry like he's never met one. You look at the invoice. then at the softened card in your wallet. The man they just audited will one day pay more in a single year's taxes than Reyes's entire office generates in a decade. Nobody in that building knows that yet. Neither, entirely, do you. Level 4. $5 million. You are a taxpayer. A Series A closes at a valuation that pushes your net worth past $5 million. It doesn't feel like wealth. It feels like owing $210,000 in estimated taxes, more than your first 3 years of income combined. Your compensation gets restructured, salary and equity split, to reach the lower capital gains rate, a bridge that costs $16,000 a year to build, available in theory to everyone, and in practice, to whoever can afford the bridge. You attend your first $2,500 a plate fundraiser in a room where the average net worth is 8 figures and feel poor for the first time since you actually were. A sitting congressman shakes your hand, asks what your company does, says, "That's terrific," and is gone before your second sentence. 3 weeks later, his office calls about a pilot program. The call doesn't happen without the dinner. The dinner doesn't happen without the plate. You hire a lobbyist for $12,000 a month, whose entire job is making sure your company is in the room before the rules are drafted, not after. At 0, you couldn't get on a sign-in sheet. At $5 million, you pay $144,000 a year just to be early. Then you learn Dalton Reyes is now in Congress, seated on the subcommittee overseeing your entire industry. Your lobbyist mentions it over coffee, casual as a scheduling note. You take the old card out of your desk drawer instead of your wallet. It's no longer something you carry by accident. Level 5. $60 million. You are a stakeholder. An acquisition and a public offering push your net worth to $60 million. Your advisor gets you onto a quarterly policy council. No cameras, nothing on the public calendar. Input officially non-binding. Months later, you read a regulation and recognize your own sentence structure inside it. You testify before a Senate committee. Reyes sits on it now and asks a scripted question about data ethics. Your answer isn't scripted. When I was sleeping behind a laundromat, I filed my first return on a portal that crashed twice. The room goes quiet for 3 seconds. He doesn't follow up. Your effective tax rate this year is 19%. Your executive assistance is 25%, on a $71,000 salary. The government takes a larger share from the person who answers your phone than it takes from you. Not evasion, architecture, capital gains treatment, charitable stock donations, credits stacked by a tax team costing $310,000 a year that saves you $12 million. At this altitude, the system isn't broken, it's tailored. Unfairness is just what tailoring looks like from underneath. A federal agency drafts a rule touching your core product. Your lobbyist has a copy before it's public. By the time smaller competitors read about it in trade press, you've already submitted changes. The 60-day comment window opens 40 days after your influence has already closed it. You're invited to a private retreat. 40 executives, a dozen senators, no press badges. Reyes sits beside you at dinner, asks warmly about your journey. You give the short version. He says, "We need more founders like you in rooms like this." The card stays in your jacket pocket the whole dinner, a record of exactly what he doesn't know about who he's talking to. Level 6. $500 million. You are infrastructure. The Department of Commerce stops calling to regulate and starts calling to partner. A 9-figure, multi-year contract, negotiated rather than imposed. Your company employs thousands across a dozen states. When your team calls a senator's office, the callback comes within the hour. Not from donations, but because you're the largest private employer in 2 swing districts. Nobody designed this as leverage. Employment became leverage on its own. A congressional hearing on market concentration puts you in front of a junior representative asking, on record, whether your company pays its fair share. Your answer is ready and unhurried. Total taxes paid, jobs created, the share of small business filings processed nationally through your platform. No follow-up question. The resulting report runs several hundred pages and recommends further study. Nothing changes. The investigation has the energy of a system that can't afford the answer it went looking for. You start a foundation, funding digital access centers in neighborhoods like the one where the 5th Street shelter stood. The tax deduction on the donated stock saves you tens of millions. The same government that once billed you $42 for a driver's license now pays you 8 figures to give money away. The charity is real. The tax benefit is real. Both facts are true in the same sentence. Reyes announces a presidential run. Platform built on reining in unchecked corporate power. The launch live-streamed on your company's cloud infrastructure. He's running against your influence on a platform your own engineers keep online. Level 7. $10 billion. You are the system. When the administration mentions technology policy in a national address, your company is the unnamed subject. Your legal team has marked up bills before most members finish the first read. You don't lobby government anymore. Government lobbies you. Your effective tax rate is 3.8%. A teacher in Ohio earning $54,000 pays 21%. Not evasion, architecture. Unrealized gains. Offsetting income. Structures deferred across decades longer than most careers will last. A bipartisan bill on unrealized gains taxation carries a narrow carve-out, language drafted by your lobbyists 4 years earlier for an entirely different bill, migrated whole and unchanged into this one. You're taxed in the end by a code that contains your own handwriting. Reyes lost the presidential race. He's Senate Majority Leader now, and he requests a private meeting. No staff, no calendar entry. He needs your endorsement for an infrastructure bill routed largely through platforms you own. He closes with 5 words. We can't do this without you. You take the card from the drawer and set it on the table between you. Gold seal gone dull. Edges soft from 20 years in wallets and drawers. If there's anything I can do, he doesn't recognize it. You tell him, you gave me this outside a shelter your councilwoman voted to close. I was 19. His face doesn't show shame. It shows the arithmetic of a man realizing a piece of his past just became expensive. You endorse the bill, not because he asked, but because it funds infrastructure in neighborhoods like the one you slept behind. Your company will build it, your foundation will staff it, your tax structure will benefit from it. The government, Reyes, and you have quietly become the same system, and the distance closed so gradually that nobody can point to the day it happened. Where the laundromat used to be, there's a development now. His name on the plaque, your logo on the screen inside the community center on the ground floor. A kid walks in, sits at a free terminal, and searches how to build an app. The search is free. It generates a fraction of a cent in revenue for your company. Somewhere downtown, in a building you also own, your tax team is already calculating what that fraction is worth to deduct. The government treats both of you as citizens. What that word actually costs is the only thing that changed. Subscribe if you enjoy this story. Help me to reach 1,000 subscribers